So right now, I'm going to be giving guys a simple explanation on how we could profit from trading patterns. So this is a continuation of our video series. So if you haven't watched my previous video, then I recommend you guys to do so, because this video would not make any sense without watching these videos in particular order. So let's begin by looking at the charts right now. And as you guys can see, we will be trading patterns. So we have our first pattern right here, which is a rising wedge. And for your information, a rising wedge is a bearish pattern, because essentially, to simplify it to you guys, if we are trading patterns, we are trading market psychology. As you guys can see, we are in a strong uptrend right here, but as soon as we have formed this rising wedge, you can clearly see just by looking at the charts, we have lost upside momentum, and we are losing buying pressure. So therefore, this makes the rising wedge a bearish pattern. Now let's talk about this and how you could profit from this rising wedge. So first off, you have to wait for a breakdown to happen, and the breakdown happened over here. As soon as the price has broken down of the rising wedge, you would like to wait for a retest, but sometimes the price doesn't have a retest of the rising wedge, and it just continues to move towards the downside like this. But usually we also see sometimes a retest happen for the price, and that's where you could enter into a short position and profit on the way down. And again, right here, you could have entered into a short position on Bybit. You should open a short position, and essentially a short position is you're betting that the market would move to the downside and you would profit on the way down. The profits really depend on the leverage you're using. I have mentioned this in my previous video. You could adjust your leverage right here from 1x to 100x, and be warned, the higher the leverage, the higher the risk of getting liquidated. So be aware of this. Now, if you do move further into the right here into the charts, here is an example of a falling wedge, which is a bullish pattern, because we are losing downside momentum, we are losing selling pressure, and this is when you should be looking into entering into a long position as soon as we do see a breakout of the falling wedge. We broke out of the falling wedge right here, and you could have entered into a long position here, and then ride this wave towards the upside, open a long position, and then take profits on the way up. Ideally, you would like to take profits when the price has touched the base of the wedge. As an example, for this rising wedge, the profit target would be right here. So you would have taken profits somewhere over here and exited your positions. This falling wedge, you would take profits over here. As you guys can see, we had a pullback right after that. At the other patterns in the charts, we have channels, and you can also trade and profit from channels. If you see it break out, let's say we have this descending channel, and you would like to open a long position when you see the price break above this channel. So open a long there and take profits over here. We have more examples. The sideways channel, so this is also good for scalping. You could open long positions right here, open another long right here, profit on the way up, open a short position, profit on the way down. And then once we do see a breakdown, as an example right here, you could have opened a short position and profited on the way down. We have more patterns over here. We have triangles right now. We have an ascending triangle, and an ascending triangle is a bullish pattern, because if you take a look at the charts right now, you guys can see that whenever we do touch resistance right here, people are selling, but whenever we touch support right here, people are buying. But as you guys can see, the buying pressure here is strong because we are forming higher lows. So it shows the market sentiment towards the price. So once we do see a break above the triangle, that's when you would like to enter into a long position. And that's where you would ride this wave towards the upside. And to measure the targets where you could take profits, measure it like this, and then drag it to the point of breakout. This is your take profit target somewhere over here. So exactly after that one, we could see a pullback right after that. So if we do move more into the right, we have reversal patterns. We have formed this inverse head and shoulders pattern, which is a bullish reversal pattern to the upside. You would take a long position once you do see a break above this neckline. That's when you would enter into a long position. And to measure the take profit target, it would be right here. Exactly right after this pullback, we have a symmetrical triangle. Now, a symmetrical triangle is a 50-50 pattern. We could either break to the upside or to the downside, but in this case, the bears won because we broke to the downside, and this is where you could take a short position. If you move further to the right, we have right here a double bottom pattern, which shows that we are losing momentum to the downside. We're losing selling pressure, and you would like to enter into a trade. Once we do see a break above the neckline, this is where you would enter into a long position and ride the wave towards the upside. You could just go searching on Google all all the list of patterns. Now, this trading strategy is best combined with the RSI trading strategy. So if you want to learn about the RSI trading strategy, then do click the video that's being displayed on the screen right now.